Hi everybody. So today we are going with the RTP. In the coming days we will solve the MTP also, and we will also have certain marathon sessions for questions of the important chapters or the chapters that you usually find difficult. For example, the ITC chapter. We'll have a questions marathon session in the coming days soon, probably possibly within the first week of April. So now we are going with the RTP. We'll wrap it up in half an hour so that you can revise whenever you can in the least time possible. So without any delay, let's get into it. So first we start with the case scenario. As I always say, whenever it is a case scenario, go through the questions first, then come back to the case study so that you have a better picture of what they are expecting. Which of the following statement is correct regarding taxability of consolidated fee? Okay. Whether GST is payable on the receipt of 2,50,000 from corporate clients. In case of diesel purchased by Apex Learning Hub, e-way bill is. Okay, so they're asking e-way bill with respect to purchase of diesel. You don't even have to read the case scenario to find the answer actually. Whether Apex Learning Hub was required to obtain separate GST registration for additional place of business in another state. Again, it's a bit of an obvious answer, but still we need to look into the question. What is the last date to avail ITC pertaining to the current financial year? Okay, now that we've gone through the questions, let's go back to the case scenario. Apex Learning Hub is a registered person under the Goods and Service Tax law and is engaged in providing coaching services. See, this is not a school, this is not a college or university. Okay, they are just providing coaching services. The aggregate turnover during the previous financial year was more than 5 crore. During the course of internal review and compliance verification, the following facts were noticed. Apex Learning Hub provides coaching services for competitive examinations and charges a consolidated fee from students. One question was there which was regarding the consolidated fee. Let's see that. The fee structure includes tuition fee, study material charges, and access to recorded online lectures, which are not shown separately on the invoice. Study material and recorded online lectures are otherwise not available. Now, this particular line will decide the answer for your first question. Your first question was, which of the following statement is correct regarding taxability of consolidated fee charged from the students? The supply qualifies as composite supply or it's mixed supply. Okay, that is our only option possible because tuition fee is exempt. Is it exempt? No, this is not coming under the exemption eligible category. This is simply a private coaching service. So tuition fee is not exempt. Each component must be taxed separately even if a consolidated price is charged. No, absolutely not. Our only confusion here is it a composite supply or is it a mixed supply? How will you decide it? The answer, as I said, lies in this particular line. Study material and recorded online lectures are otherwise not available. So it is not possible to separate it and sell it as a different product. So where does it come? Automatically it comes to the composite supply because it is naturally bundled together. Alright, because tuition fees, most of the coaching institutions, they give it as composite supply. Your study materials and your access to recorded online lectures along with the tuition fees. Okay, so this will be considered as composite supply. Next, during the financial year, Apex Learning Hub received an advance of 2,50,000 from corporate clients for conducting customized training programs against which services were rendered in the subsequent financial year. We all know if it is advances received in case of services, it will be taxed at the time you are receiving it. Correct? The time of supply will be the time when you are receiving the amount. Only for goods we have the benefit of taking the time of supply as the time when the invoice is issued. Alright. So we had a question regarding that also. Whether GST is payable on the receipt of 2,50,000 received? Yes, it is payable at the time of receipt of 2,50,000 because it is for services. That is a keyword. Third one, during the financial year, fourth, Apex Learning Hub purchased diesel for an amount of 50,000 for running the emergency power backup facility at its center. The supplier was located at a distance of 20 km from the location of the center. Didn't they ask a question regarding this? In case of diesel purchased, e-way bill is it required? No. High speed diesel, petroleum, alcohol for human consumption, all of these will not even come under the scope. Therefore, e-way bill is not applicable. Not required to be generated at all irrespective of the value of goods. Alright. So that's the answer. Apex Learning Hub opened an additional place of business in another state during the year. See, Apex Learning Hub last year's turnover itself was more than 5 crores, correct? They mentioned initially it was more than 5 crore. So registration is mandatory at this point, correct? Now they have opened an additional place of business in another state also, correct? How do we see GST registration? It is state-wise. GST registration is always state-wise. Only when you're calculating your turnover requirements, you take PAN basis, correct? However, the invoices were issued from the original GST registration without obtaining separate registration is not correct, okay? So whether Apex Learning Hub was required to obtain separate GST registration in another state? Yes, as registration is state specific under GST. Only turnover you will check on PAN basis, but registration is always state specific. Last point. The annual return was filed on 15th December. What is the due date of annual return? 31st of December. So well and before the due date they have filed it. On the basis of the facts. Okay. What is the last question? What is the last day to avail ITC? Generally, the last date to avail your ITC is 30th of November or the date of filing annual return, whichever is earlier. So here, when did they file the annual return? They filed the annual return on 15th of December. 30th of November or 15th of December, whichever is earlier. So 30th of November. So your answer is 30th November of the succeeding financial year. Perfect. Now let's move on to the next question. I will come back to question number 6, which is your long question. We'll finish all the little small questions and then we'll come back to this at the end. Okay. Let's go to question number 7 now. Mr. Jitendra, engaged in providing various services, is registered. Service provider, and he is registered as a regular taxpayer under GST. Fine. He furnished the following information relating to various output transactions done for the financial year 24-25. Alright. So what is the last requirement? You are required to compute the amount of taxable supply for the financial year, showing each time separately. All amounts given above are exclusive of taxes wherever applicable. Correct legal reasoning should form part of your answer. So they are only asking the amount of taxable supply. They did not ask you for the tax. Alright. So first one, rent received for renting of land for fish farming. Fish farming, agricultural activity. So when you are renting out land for agricultural activity, it is exempt. Okay, so this will not form your value of supply. Received a price linked subsidy. Okay, now we are coming to the value of supply chapter. Price linked subsidy from Happy Days, a registered charitable trust. What did we study about subsidy being included in the value of supply? Two cases. When you receive it from central government or state government, it will not be included in the value of supply. Correct? If you are receiving from others, this is a registered charitable trust, which means it comes into the category of others. In that, we have two scenarios. It could be directly linked to the price. It could be indirectly linked to the price. Here they have said it is a price linked subsidy, which means it is directly linked to the price. If it is indirectly linked to the price, then it will not be included in the value of supply. But if it is directly linked, it is included in the value of supply. So you will consider this for your value of supply. Okay. Then, provided services as national testing agency. This was one of the clarifications that you received for your JAN exam. Yes, this clarification was given. Recognized. To Messrs. Fine Future Institute, a recognized educational institute for conducting an entrance examination for admission to educational institute. When NTA services are given for examination for the purpose of admission, it is exempt. So this will not be included in the value of supply. Provided services by way of preconditioning, pre-cooling, ripening and waxing of fruits. The essential characteristics of fruits remain same. Whatever processes you do, if it does not alter the true characteristic of the product, okay, the fruits or the vegetables or the grains or whatever agriculture product is there, if it does not alter the characteristics, then it is exempt, no problem. But for example, if you are processing the tomatoes into ketchup, that is changing the characteristic, correct? You're just washing it and cleaning it so that it is ready for the primary market. It is marketable to the market, okay? So that is why it is exempt. Last one. Providing rooms having room charges rupees 4,500 to a person receiving healthcare services from his established healthcare clinic. This was exempt but only up to 5,000. Here our answer is 4,500, so this is exempt. Okay, exempt up to 5,000 per day. This is your answer. So next is question 8. Examine the taxability of supplies in the following independent cases in terms of relevant provisions of the CGST Act. Brief reasons should form part of your answer. Services of health insurance business. Health insurance business is one of the amendments, very important amendments. If it is provided to individual and their family, then it is exempt. Okay. So it is provided to Mr. Krish Kinare and his family. It's exempt. Okay. It's not a group health insurance. It is an individual health insurance and for their family. So it is exempt. Next. A1 hotels provided supply of accommodation services having value of supply equal to 20,000 rupees per month to a student, to an MBBS student, Mr. Pranav Sachdeva, for a continuous period of 180 days. What did we learn is the exemption condition. It should be less than or equal to 20,000 per month for a minimum continuous period of 90 days. Here it is exactly equal to 20,000 rupees per month. So the numerical limit is satisfied for a continuous period of 180 days. It's not maximum 90 days, it is minimum continuous 90 days. So this is 180 days, well and good. So it satisfies the exemption. So both these are exempt. They're not taxable. Next. Determine the time of supply in case of following transactions on individual basis by briefly stating the relevant provisions. Janvi Event Management, a registered firm, is engaged in the business of event management services. Okay. Mr. Jasbir hired Janvi Event Management on 1st February 2025 to organize marriage anniversary function to be held on 14th Feb 2025 for a total consideration of 3 lakh. Mr. Jasbir paid 25,000 as booking amount on 4th Feb. What is this 25,000? Advance. Is this goods or services? This is services. What about advance for services? It will be taxable at the time of receipt of the advance. So for this 25,000, the time of supply is 4th February 2025. Alright, next. Janvi Event Management issued a bill of 3 lakh on 12th March 2025. This is a FCM case, forward charge case. This is not RCM case. Okay. On 12th March 2025, they paid the balance amount of 2,75,000 on 20th March 2025. Now, for 25,000 out of this 3 lakh, we know the date. What about for the rest of the 2,75,000? When it is not, when it is an FCM case, in case of service, how will you determine the time of supply? Is it paid within, is the invoice issued within 30 days? When was the invoice issued? Booking amount on, issued a bill of 12th March. On 14th Feb is when it is happening. 12th March they have issued. So yes, they have issued within 30 days from the date of invoice. So your time of supply will be the earlier of two things. The date of issue of invoice or the date of receipt. What is your date of invoice? 12th March. When did they pay? 20th March. Earlier is 12th March. So your time of supply is 12th March. So for 25,000, your time of supply is 4th of February. And for this 2,75,000, it shall be 12th March. Next. Mr. Shravan Kumar, a registered person, undertook the service of transportation of goods. GTA. This is an RCM case. Okay. A registered person on 1st Jan 2025 to transport goods from Gurgaon to Faridabad, Haryana. Long way tempo services issued invoice for 30,000 on 2nd Jan 2025. Shravan Kumar issued a check of 30,000 on 18th Feb 2025. So invoice is on 2nd Jan. Check payment was on 18th Feb. Entered in the books of account also on 18th Feb. But debited from the bank on 19th Feb. When it is RCM cases, what is your time of supply? It will be earlier of the date of payment, or if the invoice is issued by the supplier, 61st day from the date of invoice. If it is issued by the recipient, then the date of invoice as issued by the recipient. Correct? Now, date of payment will be earlier of two things. Whenever it is recorded in the books of accounts or whenever it is debited in the bank account. Here it was recorded in the books of accounts on 18th Feb. debited on 19th Feb. Whichever is earlier, 18th Feb. Correct? Now here 61st day from the date of invoice of the supplier or the recipient date of invoice. Correct? Now if you look at all these dates, which is the earlier one, 18th Feb, because when did they issue the invoice? Who issued? The supplier issued the invoice. Supplier issued the invoice on 2nd Jan 2025. From then if you calculate 60 days, it is well and good more than 18th Feb. Yes, it will sit somewhere in March. So we need 18th Feb, which is the earlier date. So your time of supply will be 18th Feb. Next. Last question. Once we finish this question, we'll get back to the long one, the one where we calculate your output tax liability, your ITC, and what is your net tax liability. Okay. Question 10. Alpha distributors registered in Maharashtra supplies goods to beta retailers registered in Gujarat. Due to urgency, Part A of the e-way bill is furnished by beta retailers. Who are beta retailers? They are the recipient. Supplier is alpha distributors, recipient is beta retailers. So recipient is filling the Part A. Okay. On 5th March at 2 p.m. The goods are delivered on 7th March at 10 a.m. The details of the e-way bill are made available to alpha distributors on the common portal immediately upon generation. Alpha distributors does not communicate acceptance or rejection of the consignment. Fine. Examine to whom were the details of the e-way bill made available under relevant provision. This is such a generic question. Okay. Because if the Part A is furnished by the recipient, whom will it be furnished to? The supplier and the transporter. But if it is filled by the supplier, then whom will it be furnished to? The recipient and the transporter. Correct? So here, who has furnished the e-way bill? The recipient has. So to whom this e-way bill is furnished? Obviously to the supplier or the transporter, right? Here the supplier is registered, yes, so obviously that fellow will be given this information. That's all. That's why I said this is such a generic question. What is the last date and time for communication of acceptance? We all know this. 72 hours from the date from which the information is made available. So when have they made it available? On 5th March at 2 p.m. 72 hours means 3 days. Correct? That is 5th March, 6th March, 7th March, 8th March. 8th March at 2 p.m. Correct? Or earlier of two things, 72 hours from details made available or the date of delivery of the goods. When is the delivery date? 7th March at 10 a.m. This is 8th March, this is 7th March. Obviously, the earlier is the date. On 7th March by 10 a.m. they should have communicated that it is accepted or if it is rejected. If they fail to do it, it will be deemed accepted. Correct? So when will deemed acceptance apply? 7th March, just now we said that, correct? 7th March, 10 a.m. Simple. Now we'll go back to the main question of the RTP. There we go. Nivedita Private Limited, body corporate, is a manufacturer of televisions at Mohali, Punjab and has a service center at Bathinda, Punjab. The company has taken a single registration of GST. Both their manufacturing plant and their service center is also in Punjab. So they have a single registration of GST. No problem. It provides the following information for the month of November 2025. Okay. Now they have additional information also. What are the rates? Okay. So they've asked us to compute the GST payable on outward supply, GST payable under reverse charge and ITC available. They have not asked for the net tax liability or anything. They have just asked 3 different points. Okay, compute the GST payable on outward supply, GST payable under reverse charge and whatever is the ITC available. That is all they have asked. Okay. Rates are 2.5, 2.5 and 5 in case of transporter. In case of others, it will be 9, 9 and 18. Okay. All figures are exclusive of taxes. Then we have certain additional information which we will read along with the questions. So first is outward supply. Supply of televisions to Shine Electronics Limited located at Ludhiana, Punjab. So this is intrastate. CGST, SGST will apply, but let's see if there is any additional information relating to this. Okay. Purchase of raw materials includes the raw material. So we did not come across such a point. Credit note of 80,000 was issued on 30/11/2025 to Shine Electronics Limited. This is the exact point we were reading, correct? Against invoice of 4,20,000 issued on 10/3/2024. So when is the original invoice date? It is on 10/3/2024. So for an invoice that is dated 10/3/2024, what is the maximum time by which they can issue their credit note? The answer is in the subsequent financial year, 30th November. Correct? 30th November of the subsequent financial year. So 10/3/2024 means year ending 31/3/2024. So for that maximum 30th November 2024. But when did they issue this? 30th November 2025. 1 year later from when they were eligible to issue. Correct? So this is an invalid credit note. We will not give any effect to this particular credit note. Okay. What are the other information? Annual return was filed on 30/10/2025. Turnover was 160 lakh for FY 24/25. Great. So for this particular point, there is no other additional information. You just have to calculate 20 lakh into 9%, 9%. Raw material transferred to service center located at Bhatinda branch. Now these both are within the same state. They both are covered under single registration, single GST registration. These are not distinct persons. Okay. So this will not amount to supply. So you don't have to include this. Received advance from New Electro Divine registered at Delhi for purchase of television. This is receiving advance in case of goods. So here the time of supply will be the time of issue of invoice. Okay. So this you don't have to include it now. Received advance from New Electro Divine registered at Delhi for payment of annual maintenance charges of television, as New Electro Divine also undertook optional AMC of television. Now annual maintenance is a service, correct? So you have received the advance for a service. The time of supply will be the time of receipt of advance. So 50,000, you will calculate the GST. But they are in Delhi. We are in Punjab. Interstate, so 18% will apply. So 9,000. So your total outward supply is 9,000 IGST, 1,80,000 tax. Okay, the tax portion is 9,000, 1,80,000 and 1,80,000. Now coming to inward supply, where we will also find out how much is the RCM rate also. Alright. Purchase of raw material from Electro Enterprises registered at Ludhiana, Punjab. But we read one of the additional point here. Purchase of raw material includes the raw material of 1,20,000, which was purchased on 10th March 2025. So that is year ending 31/3/2025. But the invoices were uploaded in GSTR1 on 18/11/2025. And such details have been communicated to the recipient in form GSTR2B. Now this is where your third point comes into play. Okay, your annual return for financial year 24/25. This is originally for financial year 24/25. You have filed the annual return on 30/10/2025. Annual return is your final chance to correct anything. Okay, so for this particular year, you have filed the annual return on 30/10/2025. Now you're saying the invoices were uploaded on 18/11/2025. Is that valid anymore? No. You cannot take this into effect. So you are going to remove this 1,20,000 from the value. Right? 25 lakh minus 1,20,000, that is 23,80,000. On this, here it is Punjab only. So it is intrastate. So 9%, 9%. Next. Freight paid for transportation of television to a tempo owner registered as GTA. RCM. Because tempo owner issued invoice without any GST. So they have not opted for FCM. So this will definitely come under RCM. So 50,000, on that we have already said it is 2.5%, 2.5%. They are also in Punjab. So 1250, 1250. Paid rent of factory and service center to Mr. Rakesh, who is an unregistered person, and the value is 1,20,000. This will be covered under RCM. Yes. So here again it will be 9%, 9%, because this fellow paid rent of factory and service center to Mr. Rakesh. It's within the same state. Security services received from safety and security services. Whenever you are talking about security services, first thing that you need to check is our supplier a body corporate or not? Here clearly they are not. Merces Safety and Security Services are not body corporate. Okay, it's a sole proprietorship firm. Okay, so this will be clearly covered under RCM case. So 25,000, where are they from? They are in Punjab. So it will be intrastate. So 9%, 9%. Now three things are RCM. Yes, this will be your answer for RCM supply. Alright. This, hold on a second. So this will be the portion that they have asked for. What is your total outward supply tax liability? Yes. For your total ITC, this is the answer. The entire thing, including purchase of raw material plus your RCM portion. Okay, this is your entire ITC available. And one more question they have asked, how much is your RCM supply also? So this will be the answer for your RCM supply. That's all. Okay, to sum it up, outward supply 9,000, 1 lakh 80, 1 lakh 80. Just put in the value of supply also. Okay, put in the taxable amount also. Next is RCM 14,300, 14,300, which is the addition of these three things. And then finally, so your total payable is this 9,000, 1,94,300, 1,94,300. Your total ITC is 2,28,500, 2,28,500. If they had asked for net tax liability, what will you do? You will utilize it according to the rules, and then you will have excess ITC only here. Okay, so that's all. They only asked three requirements. What is the outward supply? What is the RCM? What is the ITC? Done. Alright. So that's all with our RTP session. I hope everybody have a good day.